Demand has been waning, especially for the two most popular models, the Model Y, which is the best-selling electric vehicle in this country. We're at 7% right now, Kelly. To go from 7% up to 66, 68%, there's going to be a lot of pain and a lot of cost involved.
Yeah, I mean, they're in a unique position, right? Because they have kind of the best cost structure, right? They don't advertise, they don't have dealerships. So I think they have the ability to cut prices more than a lot of their competitors. They're also obviously earlier to EVs than others.
In this video, after Tesla does what they told us they were going to do 17 years ago, the media has a lot to say. We're going to be looking at some facts, the things that don't care about your feelings, pricing history on Tesla vehicles, the S3, X and Y. Where were they then? Where are they today? We'll hear from some supposed experts who do not know what the f*** they're talking about, and somebody who actually does know what the f*** they're talking about, for a change. And if you'd like to hear from a guy that doesn't know what he's talking about, head over to Patreon with the card in the corner or the link in the pinned comment. More than 300 exclusive videos and counting fast.
Tesla now, whose stock is down 20% in the past 2 months, including a 2% drop today after they announced another round of price cuts. These are the fifth price cut since January, and they come about a week before new rules for EV tax credits go into effect. Let's turn to Phil LeBeau. Phil, does that explain their move here?
That's part of it, Kelly. The other part is that demand has been waning, especially for the two most popular models, the Model Y, which is the best-selling electric vehicle in this country.
If you didn't know anything else but the fact that the Model Y is the best-selling electric vehicle in the United States, if that's the only thing you knew, and then you hear a statement that follows up suggesting that demand is waning for literally the best-selling electric vehicle in the United States, you may ask yourself the question, does that make sense? Is that credible? If it's the best-selling electric vehicle in the whole fucking country, it's literally selling better than any other electric vehicle in the entire country, it's quite an extraordinary claim to claim that demand is waning. And as we know, extraordinary claims require extraordinary evidence. I look forward to seeing that extraordinary evidence in just a moment. CNBS.
And the Model 3. So here are the new base prices for the Model Y and the Model 3. By the way, this base price for the Model Y, this is an all-new model, and it's coming in just under $50,000. The Model 3 now drops down another $1,000 to $41,990. The price cut fallout, if there is one, and we're seeing that today in shares of Tesla, analysts are not surprised. I read every analyst note today, and all of them said the same thing. Big surprise. We wouldn't be surprised if there are more. The wait times, as I mentioned, they have fallen, but at what price for Tesla shareholders? The price being gross auto margins. Will they fall under 20%? The expectation right now is that for the first quarter, they will come in at 20.1%, or 20.5, I should say, percent. And we could see that shift over the next 2 weeks before they report their Q1 results. Remember, Tesla still dominates the U.S. market, selling almost 2 out of every 3 electric vehicles in this country, but its market share is eroding as many expected as you see more electric vehicles come into the market. This, by the way, Kelly, it was up at 75% in the first quarter of last year. The standard range Model Y, getting back to your point, Kelly, about whether or not the new EV tax credits will have an impact, that's not expected to qualify for the full $7,500 because the battery pack the cells come from China that are put into those standard range Model 3s. So what you could see when these rules are coming out next week is that some Teslas may get the full $7,500, some may only get $3,750. And this adjustment in the price is likely Tesla's way of saying to potential customers, okay, you don't get the full $7,500, but look, this price has come down relative to where it was.
So I also was skimming Whitney Tilson's note this morning, Phil, that said two of my...
So, just in case you aren't familiar with the name Whitney Tilson, Tilson is a well-known Tesla short seller, well known for being completely wrong about the company, embarrassingly so, for years on end. And Tilson is about to present some anecdotes, alleged anecdotes I might add, about 2 friends who have had a bad experience with their Tesla, which definitely doesn't help him and his narrative and his attempts to make money shorting Tesla stock. Oh wait, no. That would help him. If you guys want to do a bit of homework, have a search for Whitney Tilson Tesla, going back many years, in fact more than half a decade, and see what this guy has had to say about Tesla, see how well his shorts against Tesla have panned out, and see how many of his predictions about Tesla have actually come true. might provide some important context.
Friends hate their new Teslas, and among the reasons were that they didn't like that yoke steering wheel. They don't like the certain kinds of buttons for the functionality, the touchscreen. They say the stereo is horrible. If they fiddle with it while backing up, the rear camera disappears. The software is terrible. The service has been a nightmare. A bumper took 4 months to replace. One got rid of the Tesla and replaced it with the BMW i7. My point being, is it possible that Tesla has not yet found the car for everyone? You know, the demand has been incredible. Its supply, you know, it's going to be hard for any upstart to compete. It's even hard for Ford and GM to compete. That said, they need to pivot now, don't they, to a car that can truly be a mass market car at a price point and perhaps with features that can be adopted in a very, very broad way. And I wonder if the market is a little disappointed that they have yet to kind of do that.
Well, two things here. You're asking 2 points that you're making here. One deals with the features of the car. We'll talk about that in just a bit. With regard to the price point, Tesla is expected at some point, whether it comes in 25, 26, 27, to come in with a lower priced mass market model. Some have called it a Model 2. That's just a name that's been thrown out there. And that may come in somewhere in that $30,000 to $35,000 range, something that could make people say, wow, okay, I'm ready to buy this. And by the time that comes out, Kelly, we're likely going to see other lower priced offerings from other automakers. With regard to the functionality, and you mentioned Whitney Tilson's comments, I can point to as many people who love different things about the Tesla, whether it's the yoke, whether it's the iPad that they use for controlling all of the functionality within the car.
Credit to Phil LeBeau here for being reasonable and adding some important context. For every one prominent Tesla short seller who wants to say negative things about Tesla because they're betting against the stock, and if it bleeds, it leads, you find many more Tesla customers who love their product.
But it's a matter of style and taste. There may be some people out there who are saying, you know what, I want the full instrument cluster. I do not want to have the iPad in the center, and that it's a little too Spartan inside the Tesla.
I think it's fair to say that the only folks who prefer 420 different individual physical buttons to do things inside their vehicle are what we call dinosaurs. The same dinosaurs who, upon seeing Apple's iPhone, complained that it didn't have individual buttons for every letter of the alphabet. How can we possibly type things on touch? I don't want a touch screen. These people do exist, and they're welcome to their opinions. But I'm here to tell you, ladies and gentlemen, in the future, there won't be buttons inside vehicles. There will be touchscreens inside vehicles. The reason I can so boldly make this claim is because from a manufacturing point of view, it costs money. It costs time. It adds complexity. It creates new failure points to add physical buttons when the same function can be accomplished with software and a touchscreen. The best part is no part. The best process is no process. And if companies are providing a superior experience and doing so more economically, because they're not having to spend the money putting the buttons in, spend the time putting the buttons in, employ the people or the robots to put the buttons in, and that company can sell their product cheaper than a competitor with the physical buttons. Physical buttons made sense before touchscreens. But it's 2023 now. This will be like a consumer being butthurt at Apple because there's no physical buttons on their iPad. Fuck you, Apple. I want my buttons, bro. I mean, there are people like that, I'm sure. But the opinions of dinosaurs don't count for much. Just the facts.
But so far, their game plan and that style has worked. You can't deny that.
Absolutely.
And that's why they have the 2 best-selling EVs in this country.
Yeah, a quick final comment, Phil, on Ford and GM and the rest of the automakers. Especially now with the administration really pushing on fuel efficiency and all the rest of it. I mean, is this making their next 5 to 8 years that much more expensive? And is the market frustrated by that?
Oh, it's going to be much more expensive. And we'll get the full rules. It's expected on Wednesday, Kelly, when we get the new EPA guidelines, which is expected to dramatically push the auto industry towards sales of EVs, maybe 2/3 of the sales of vehicles in this country being EVs by 2032. We're at 7% right now, Kelly. To go from 7% up to 66, 68%, there's going to be a lot of pain and a lot of cost involved.
Phil spitting facts.
Yeah, well said. And Tesla down 20% since February, but still up, I think, almost 60% this year. Phil, we'll leave it there. Thank you, sir. Phil LeBeau reporting.
Here to discuss today, former Ford chief CEO, CNBC contributor, and senior advisor to TPG, Mark Fields. Mark, great to have you. This was interesting the second time, the third time, now 5 times. What is the calculus here? What are they thinking?
Well, I think overall, as you mentioned, Carl, this is about the 5th time they've cut prices and the 2nd time they've cut broad-based across the product lineup. And I think, overall, this is, Musk has said he is willing to sacrifice margins to keep the growth rate going. And if you think about the growth, their first quarter sales and deliveries they grew about 36%, which was down from the 40% growth that they had last year, full year, which again is down from their goal of growing about 50% each year.
Not this again. I mean, really, how many times have we heard somebody who's either intellectually dishonest or actually suffering from legitimate brain damage claim that Tesla's not on track for their targeted delivery growth? And then they use the term 50%, but they don't simultaneously use their brain. If they had used their brain and they understood the definition of words, because words actually have definitions, they would read words such as 50% compound annual growth rate over a multi-year horizon, and they would understand that 50% compound annual growth rate over a multi-year horizon means, I know, wait for it, ready? 50% compound annual growth rate over a multi-year horizon. This is the IQ test of IQ tests. I've seen analysts fail it. I've seen folks like Mark Fields fail it. I've seen everyone fail this test. You don't get to invent your own meaning. I want to claw my eyeballs out when I hear somebody idiotically and falsely claim that Tesla's not on track for their delivery target. Are people's brains that fucking small that they do not understand what words mean? And then they'll invent meaning where there is none? I don't get it. I really wish I didn't need to explain this, but unfortunately I do. A few years ago, Tesla began guiding quite clearly and in no uncertain terms that they expect to achieve 50% average annual growth. You know what that means? If the words average and annual are in there, you need multiple years, hence annual and average, because you can't average a single year. There's no average, it's just the year. Repeated, again for clarity, on this slide from Tesla's most recent earnings report, which apparently none of their morons who are claiming Tesla's behind their growth target read, or if they did, they just invented their own meaning. We expect to achieve 50% average annual growth in vehicle production and deliveries over a multi-year horizon, although not necessarily on a yearly basis. I don't know how much clearer Tesla could be. I mean, they literally put a slide in their most recent earnings specifically for the morons who do not know the definitions of words. They thought maybe a chart would make it a little bit easier to understand. Apparently not. See this blue thing here? This is a 50% compound annual growth rate since 2020, when Tesla began guiding the 50% compound annual growth rate in blue. In red, we have reported deliveries. If the red bar is bigger than the blue bar, Tesla is on track. In fact, they're in excess of their 50% compound annual growth rate. If the red bar is lower than the blue bar, they're not on track. Mark claims that Tesla is not on track. I claim that Mark is a moron. Tesla, just over the 50% compound annual growth rate in 2020. In 2021, significantly over. In 2022, significantly over. And in 2023, Tesla need to deliver less than 1.7 million vehicles to be ahead of their 50% compound annual growth rate. If you hear anybody reference this 50% figure in such an intellectually dishonest way as to suggest that Tesla's behind track, I highly encourage you to dismiss everything that ever comes out of their mouth again, because they're either a moron, they're disingenuous, or they're outright deceptive. None of these things are positive traits. I can't wait to see the morons at the end of 2023 claiming that Tesla fell dramatically short of their 50% growth target again, because it will happen. Despite Tesla absolutely crushing what's necessary for that compound annual growth rate to be maintained above 50% over a multi-year horizon, I can tell you exactly how this plays out. As soon as final numbers come in for 2023, those whose brains do not work, or they've intentionally decided not to use, will claim that Tesla has had a catastrophe. They've fallen enormously short of their target of 50%.
So I think overall they're looking at demand. They're also probably playing, listen, they have a better gross margin than some of the established automakers. And I think Musk is saying, listen, I'll put the squeeze on them. I'll grow my my overall share. And that'll have benefits down the road from brand loyalty, parts and service business, et cetera. But I think that's the calculus that he and Tesla are taking.
Yeah, so a lot of analysis of the cost structure we already understand and the advantage they have from a margin standpoint. How do others react? Can they afford to follow these?
Well, I think what you're seeing, some of the established automakers did follow some of the price cuts. I think Ford did, but folks like VW and Hyundai Kia did not. I think the way they're a bit in a bind in their first generation products. The margins aren't very good. Probably most of them are negative. But a lot of them are working on, next generation platforms and next generation products. For example, Ford is building a brand new facility in Tennessee, and they say that's going to allow them to cut their manufacturing and engineering costs significantly and the piece costs. So I think you're going to see this play out over time. But for the time being, Tesla does have a major advantage with the margins they have versus the established automakers and even the startups who are, I think, in really difficult times over the next 12 to 24 months.
For somebody suffering from such severe brain damage, I'm impressed that Mark can actually make reasonable points about Tesla. If only he knew how to use a dictionary and understand the definitions of words. Maybe there's still hope for this guy.
Enough to justify the valuation, Mark? That's always the question on Tesla, right? They have to dominate this market, don't they?
Yeah, I mean, listen, by any kind of established measure of how you value a company, it doesn't make sense. But I think, a lot of the retail investors are betting on this growth long term. I mean, if you think about it, their price earnings ratio is, the beginning of the year was 20. Now it's about 45. And again, if you used established measures, Tesla would literally have to garner the lion's share of EV profits in the industry, much like Apple does in the cell phone arena. And that's a big stretch, but I think right now investors are betting on that. But you're seeing the stock react over the last couple of days because of these successive price cuts, which may put in their mind, hey, is Tesla turning into just another automaker with a lot of these price cuts?
Oh, hey, it's me with some facts, the things that don't care about your feelings. Just thought I'd share this. It's kind of relevant. We're looking at the Tesla Model 3 price history. If you guys want to pause and look at all the detail, feel free. As Tesla ramped up production, prices came down, then flatlined, and then began to increase. Very important to understand here. Prices increased beginning in early 2021 and continued to increase until early 2023. Today, Tesla's Model 3, doesn't matter which trim you're talking about, is selling for approximately the same price it was back in 2019. Ignoring the rather insane inflation over this period of time, we can see, for example, Tesla's Model 3 Performance back in mid-2019 was selling for about $55,000 US. Today, around $53,000 US. I thought the prices have been cut 4 trillion times. I thought there was no demand, and that's why they're cutting. But if there was no demand, then wouldn't the price be way lower than it was years ago when they were producing less? Does not compute. The long-range all-wheel drive Model 3, back in 2019, in February, selling for $49,900. Today, selling for $49,000, but I thought the price cuts because no demand. And why would they be selling a vehicle for the same price in 2023 that they were selling it for in 2019? Good question, Stephen, but stop asking questions because thinking hurts and I don't want to think. What about the Standard Range Plus? There was a brief period of time back in 2019, early 2019, where this thing was selling for $39,500. Today, it's selling for $41,990. Hang on a minute. But haven't Tesla's cost to produce the Model 3 gone down over that time? But the price is higher? I thought there was no demand. That's a bit weird. Obviously, the Model Y will paint a very different picture, right? Oh, this looks a bit awkward. I think we're seeing a similar trend here. Performance launches for about $60,000. Today, it's available for about $56,990. And prior to recent price cuts, the price had climbed all the way up. Reminder, from $60,000 US to about $70,000 US. But I thought they kept cutting prices because there was no demand. That's weird. How about the long-range all-wheel drive? Launched for $51,000 just a couple of months ago at $66,000 and now currently selling for $52,990. This doesn't quite fit the narrative. I thought they kept cutting prices because there was no demand, but if that's true, then why did the prices increase steadily on almost all of these models consistently until moments before the Inflation Induction Act, where Tesla began to adjust pricing to ensure that consumers weren't getting fucked in the face by this corrupt legislation favouring legacy automotive manufacturers? I just want to show you guys and girls visually. You'd think if there were major issues with demand, that Tesla would have been cutting prices the entire time. There wouldn't be a single instance where prices increase, but there are. February 2021, Model 3 Performance is $54,990. Fast forward about 2 years, it's $62,990. I'm not very good at math, but I think that $54,990 is less than $62,990. Can somebody please explain to me why the price has increased for 2 years in a row on the Performance Model 3 and the long range all-wheel drive and the Standard Range Plus? Why would prices have been going up if there was no demand? Good question, Stephen. Stop asking. It hurts my brain. Maybe we'll take a look at the Model X. I noticed a weird trend. Starts high, comes down, prices go up again. Why would the prices go up? In January 2021, the highest trim, Model X, $99,990. At the beginning of this year, $138,990. Can somebody please explain to me, if there's no demand, why would the prices have increased by about 40% on the Model X, on the top trim model, in the span of about 2 years? Why would that happen if there was no demand? Why would the same thing happen to the long-range version? I don't know. Good question. Stop asking them. Oh, look at that. What do you know? The same fucking thing with Model S, which, by the way, Tesla themselves have explicitly told investors that the refreshed Model S is cheaper to make than the previous Model S was. Cheaper. It's better and cheaper. Yet, we see a similar story. 2 years of price increases, and now meaningful price decreases, yet still selling for more than it was at its lowest point. Isn't that weird?
Finally, the Megapack factory. Explain why that's important. What's the fallout from this?
Well, it's interesting. The Megapack, they're going to build cells for grid scale energy storage. So it's a much smaller type of market than building batteries for EVs. But this is important. I think this is a strategic move by Tesla, not only to fulfill Musk's ambition of getting the world to be carbon neutral, but also if you think about the geopolitics right now and the trade tensions and the geopolitical tensions between China and the U.S., I think by Tesla making this investment, again, another one in a strategic industry in China, will insulate them to some degree or another if, in fact, there's any kind of trade sanctions that China places on U.S. companies if the U.S. government starts, continues to put some sanctions and some trade barriers in there. So I think this is a little bit of insurance policy for them, but also at the same time, a market that's small but could grow significantly.
I'm not too sure about the insurance policy angle here. I'm pretty sure Tesla's mission is to accelerate the world's transition to sustainable energy generation. Storage, keyword storage, aka big batteries, and supply. The world, believe it or not, includes China. Spoiler alert, there's going to be more Megapack factories in other countries and other continents in the future as well. You can count on it. It's kind of Tesla's mission.
We got to talk Tesla here. The share's down just fractionally, about 0.5%, as investors digest more price cuts in a new factory in Shanghai, China. Joining us now with more on this is Tom Narayan, RBC Capital Markets lead equity analyst of Global Autos. Thank you for joining us here today. Let's just talk about the price cuts in Tesla, down another 4%, as you're noting in your notes to us, down about 19-20% year to date. They're leading the pack here, and they got a little bit of room to run. Just wondering how long they can keep this up.
Yeah, I mean, they're in a unique position, right? Because they have kind of the best cost structure, right? They don't advertise, they don't have dealerships. So I think they have the ability to cut prices more than a lot of their competitors. They're also obviously earlier to EVs than others. So it's a great way to really steal market share, I think. And ultimately, they also have a lot of things that kind of go in their favor. They're the biggest beneficiaries of the IRA tax credits this year. And also 2 of their plants, Berlin and Austin, are really ramping up, and those are going to reduce costs over time. So, yeah, I mean, it looks like a big headline, right? Cutting pricing by like 20% for some of the models.
Couldn't have said it better myself. It does make for a great headline, but when we actually look at the facts, we saw the previous pricing adjustments. Most of these models are still around the same price point, some even higher prices than they were 1, 2, 3 years ago. Despite the dramatic headline, it just speaks to Tesla's cost leadership, insane demand, and their crazy pricing power. It's so refreshing to hear somebody talking about Tesla in the finance media who really gets it.
It sounds pretty dramatic, but when you really look at how they can lower costs, it's really a great way for them to gain market share. There will be some near-term pressure on profitability, no doubt, but I think the market really understands this. And you're seeing the stock reaction. It was down more this morning digesting this news, and now it's really come back in. So I think the market is really digested a lot of these price cuts.
So that's interesting then, their time. I guess because really the trend has been that Tesla has been losing its market share, but you think that these price cuts are actually going to reverse that? Am I understanding that?
Yeah, I mean, losing market share is kind of an unfair thing just because there's new entrants coming in that didn't exist before, right? So
unbelievable. This guy has a brain and is using it in real time to respond to the idiotic comments from the morons over at Yahoo Finance. This is delicious. Tesla's been losing market share. Yeah. Because that's what happens when other companies start making electric vehicles, because math. If there's one company making all the electric vehicles, they automatically have 100% market share. As soon as a single other company makes a single other electric vehicle, Company A has lost their 100% market share and it's now 99.99999%. This is called the facts. I just love the fact that this guy's calling out this bullshit narrative in real time. I hope we see more of him in the finance media if he gets invited back.
Obviously, they're going to lose market share, but That's coming off of such a high number where they were the only game in town. But really, it is a rising tide lifts all boats. Tesla wants other EV makers because the biggest competitor to Tesla is actually non-EVs, right? It's people who are holding back on buying an EV. If there's a ton of EVs out there, there's more of a reason for you to buy a Tesla. So losing market share in a weird way is a good thing because it means that more people are buying EVs, even though it's competitors. And it means that more people are buying EVs as opposed to ICEs. And certainly by them cutting pricing, there's no doubt that they've been gaining market share now, certainly over those who haven't cut pricing. Just look at the delivery number they posted last week. It beat expectations around 420,000 for the first quarter. So I do think that this strategy of cutting prices is going to lead to higher sales. And fortunately for them, they do have some unique characteristics that make it so they don't have to sacrifice too much on profitability.
Yeah, and Tom, that makes sense when you put it that way, certainly.
That makes sense when you put it that way. What way? Logically? What the fuck?
We had you on just about a week and a half ago, and you were expecting Tesla to deliver 445,000 vehicles. It fell a bit short of your expectation there. What's your overall takeaway just from the demand picture right now for Tesla and how it is as we enter the second quarter?
Yeah, I mean, we probably overshot a little. We were looking at app download data and trying to extrapolate. You can never be too sure about using these types of methods. But at the end of the day, it did come in above expectations that were there just a week or two earlier. So, yeah, we may have been a little too high, but for the most part, that's a strong number. And now further price cuts, it's only going to help them gain volumes even more. Especially in China, where a lot of the competition is. That's where we're really seeing a pain point for some of their competitors, notably people like Volkswagen. And so it's a great way for them to at least maintain their position to the domestics like BYD, et cetera. So I think price cutting is just a natural thing that they have to do to keep growing. That Q1 number is really strong, and they're just doing it to kind of keep the momentum going. I also think they have their own view of the economy. Elon has talked about this in the press. Maybe he's a little bit more bearish on the consumer, especially in the US. And so it could also just be some caution into a macroeconomic uncertainty in the back half of the year. And you know what? If it doesn't happen, if we don't have a severe recession, like your previous speaker was saying, then it's just a great way to gain market share.
I want to spend a minute also talking about Tesla in China, but moving on to batteries. And this has to do with the Megapack. Within the last 24 hours, Tesla announcing that they're going to build a factory in Shanghai for Megapack batteries with 10,000, targeting 10,000 per year. Each of these Megapacks could theoretically power 3,600, so 3,600 homes for 1 hour. And could you just give us give us a big picture on this and why this is important toward the electrical grid and what this means for the future? Because people think Tesla cars, but it's also power and these Megapacks.
Yeah, it's a great question. It's really great that this is happening now so people get kind of educated. The fact that this is a completely new business opportunity for Tesla and in a very, very important topic for the energy transition. And that is how utilities can use renewables more efficiently. Right now, solar and wind, you only get them when it's being produced, right? When it's sunny outside or there's wind. Now with battery storage, you can actually time shift when you use these feedstocks, basically, for utilities. For China, it's a very big deal. For Europe as well. They're net importers of fossil fuels. And now they can use renewables, which is just there, right? Solar and wind. So battery storage allows them to time shift when they use it more efficiently. And what Tesla is doing is it's another big piece of their business, or will be potentially in the future. Right now, it's fairly small, but total addressable market for energy storage could be in like half a $500 billion market by 2030, in huge business opportunity. And Tesla is really one of the leaders in this space. So, what they're doing here also, and it has great impacts. You could, avoid blackouts in the US that was used in California. There's a lot of uses for energy storage. And now by them investing more, this is their second facility now, they can export some of that. They can utilize that in China as well. It's a great way for them to remind folks that they're in this business as well.
Yeah, being able to store sunlight during the day and actually use it at night, as simple as it sounds, it's been elusive at scale for a number of decades here. Finally here. Really appreciate your insights, Tom Narayan.
It appears I have something in common with one of the folks on Yahoo Finance. I too appreciate Tom's insights. And it's nice to hear a little bit of discussion about Tesla Energy in the finance media on the news of this megapack factory. Most investors, most folks in the general public are completely sleeping on Tesla Energy because it's still a spec compared to their automotive business. But this will change over time. If you want to do a little bit of homework, make sure you got a mop and bucket before you do so. Check out the average selling price of a Tesla megapack. Tesla's energy products will start meaningfully moving the needle for Tesla revenues and profitability in the coming years and decades, if we're being honest.
Time for the Disruptors. Senior markets correspondent George Sellis is with me now to talk all about Tesla. Now, when they first cut the prices, I mean, they've done it so many times at this point, and you'll give us the details, but everybody said Elon Musk was a genius because they still had high margins, and it just boosted sales. They're doing it again. Your thoughts? What are we learning?
Well, I think this is an interesting situation. I think they continue to do this, Nicole, and you could take it two ways. One, you could say that perhaps they have an overproduction problem, but at the same time, you could also make the case that there's confidence in their business and their confidence in their market share gains, as well as maintaining market share with lowering prices, because we know a lot of the other automakers like Hyundai, Volkswagen, Ford, and so forth, they're all coming out with their own EV models to start competing aggressively with Tesla. But at the same time, I think this does look towards the company as being very confident in its scalability, because if you look at the profitability of the business, especially last year, their operating margins are in the mid to high teens % area, and that's actually pretty significant compared to the other automakers. So, this is a move, and this is about the third time they've actually cut prices this year, but this time they're actually cutting across the board for all models. The highest price cut about $5,000 for more of their expensive products. But at the same time, you got to think about their production capabilities. When you looked at last year in 2022, the actual total production capacity was about 1.3 million. The expectations were only about 600,000, and the expectations for 2023 are about 1.8 million in terms of total vehicle capacity, of which in the last year was higher by 41% in terms of total production. So the expectations are still in the 40% range in terms of vehicle production and sales. I think the actual price decreases that the company is providing the marketplace are a sign of confidence. I think their market share is stabilized at over 70%, and their brands are very popular. Not to mention the tax credits, both domestically and also internationally, are also favorable attributes to Tesla, which again has a strong brand, and of course we know their models are very popular. But at the same time, some of the challenges consumers face are prices, and I think this is actually a good thing for the overall auto industry to see prices come down, especially on the newer models, and that might actually cause other automakers like Ford and GM, which are selling very expensive vehicles, to cut prices as well. So this is a good sign from an inflationary front as well.
He raises an interesting point here. It's true. Tesla's price cuts are likely to force other automotive manufacturers to cut prices on their electric vehicles. Just one problem, as we've discussed. Outside of China, and even inside China, there aren't many exceptions. No one's making money selling electric vehicles besides Tesla. After Tesla's most recent price cuts, they're still making 2 to 3 times more profit than a typical automotive manufacturer makes selling an ICE vehicle. However, the amount of money a typical automaker makes selling an electric vehicle is negative $10,000+. They're literally losing 5 figures plus on every vehicle sold. If they cut prices by a few $1,000s more, that's a few $1,000s more they're losing on every vehicle they sell trying to compete with Tesla on price. So, to his point, this is likely to force other automotive manufacturers to cut prices on their electric vehicles, which is going to accelerate their ultimate demise. Because if you cut prices on a vehicle you're already losing money selling to customers, and you increase the loss on every vehicle you sell to customers, that's probably not a sustainable business model. Unless you happen to be the Fed, in which case you can just print more money.
And we see Tesla at 182 today. I mean, Tesla is surrounded in headlines. I'm glad you hit some of those. The other headlines also include the battery facility in China that they're working on, and just a short time ago, about to launch a new big software update with new features. take that for what it's worth. But just a new factory and focusing on batteries, once again, I think that's an interesting story. Anyhow, how would you go? It's up almost 50% this year in 2023. How would you go about trading it?
How to trade, what a dirty word, Tesla stock. Step 1, have an IQ of 103, but think it's 160. Step 2, make a short-term bet on the stock because you're absolutely certain that you can predict the future because technical analysis makes sense. If successful on your first short-term trade, tell the entire world that you're a genius. If unsuccessful, blame Elon Musk because it's Elon's fault that you didn't make money trading Tesla stock. Rinse, recycle, repeat. What the fuck was that? That was really weird. I don't know what the hell happened there. Anyway, I think the point I was trying to make is I'm nowhere near smart enough to be trading Tesla stock. My brain's way too small, and I acknowledge that. So rather than tempting fate and asking for trouble, I would rather look to the long term and think, what do I believe this company is likely to be worth in the long term based on some assumptions today? What's the worst case? What's the best case? What I think is most likely? Is it going to be worth considerably more tomorrow, so to speak, as in long term than it is today? Oh, it is? Well, I'll just buy and hold. I'll leave the trading to the people who are much more intelligent than I am. But hey, that's just me. Some dumbass on the internet who isn't smart enough to outsmart the market consistently. Despite my incredibly arrogant YouTube persona, I really am aware of my limitations, of which I have many. Just trying to do the best I can with what I've got and always looking for ways to improve, grow, learn, feel, perform, and think a little better. I know this is an extremely controversial opinion, but if you don't give your body everything it needs to optimally function, not to survive, but to thrive, you probably won't feel as good and you probably won't be as good as you could. Athletic Greens AG1 is a great way to fill in nutritional gaps. I mean, check this stuff out. Look at the ingredients list on this, guys. Everything you can possibly imagine, right? We've got vitamin A, vitamin C, vitamin E, thiamine, riboflavin, niacin, vitamin B6, folate, B12, biotin, pantothenic acid, calcium, phosphorus, magnesium, zinc, selenium, copper, manganese, chromium, sodium, potassium. Look at all the other stuff in here as well. I could go on and on and on. I can guarantee you, you are not getting everything that's in Athletic Greens AG1 through your diet. It's just not possible. It's 2023. We know a lot about human physiology and biology, and we know that the body needs certain things for optimal performance. Again, if you're happy with just getting by and just making do, this is not for you. But if you really want to get the most out of life, giving your body everything it needs to feel and perform your best is a non-negotiable. Now, I've got to be honest with you guys. I'll never understand people who are satisfied with average. I can't understand. I just can't empathize. I know there are people like that. I'm just not one of them, and I can't even put myself in the mindset of somebody who's like, yeah, well, I'll just get by. It's just pay my lousy bills and no. I just can't. It's not in my DNA. And if you can relate, I implore you, try Athletic Greens AG1. There's a 90-day money-back guarantee. Athletic Greens AG1 is an excellent way to fill in nutritional gaps, which we all have. It features 75 high-quality vitamins, minerals, and whole food source nutrients. I just had a look at a bunch of them right here. Plus, prebiotics and probiotics and digestive enzymes and adaptogens to help you deal with stress. If you head to athleticgreens.com/SMR or use the link at the pinned comment, you get a 1-year free supply of vitamin D3 and K2, and you'll be well on your way to feeling and performing your best. If you're somebody who's always looking to gain an edge, this is an absolute no-brainer. Here's what some viewers of the channel have to say. I noticed 3 things with AG1. Chronic heartburn is gone, my digestion is more regular, I'm more alert, and I wake up with a raging heart on every morning. Make the most of it. My mental game has improved greatly with AG1. Didn't expect this, but man, I really needed it. AG1's been an absolute game changer in my life. 3 months in, I continue to have more energy, especially in the mornings, and to hit it harder at workouts. Plus, continue to have mental sharpness, feel more driven to succeed in both my business growth as well as my personal life goals. And this has snowballed into a new sense of peace, lower anxiety, and a refocus on priorities in life, family, friends, and better work-life balance. I never feel overwhelmed with anything. From a female viewer, AG1 is for the ladies. I've been drinking it now for 2 months. My cycle used to be awful, no more. Headaches, nausea, and cramps are history. Fatigue is a thing of the past. And fellas, if she's ever in the mood, get her some AG1. I definitely don't understand what she means here. It's got nothing to do with an increase in her libido, obviously. Moving on, another one. This user on day 8 of Athletic Greens. A few key highlights here: decreased anxiety, overflowing energy. P.S. I think they put crack in this stuff. Another one. AG1 has relieved my gut issues so that my IBS is far more manageable. It's cleared my skin, it's elevated my mood, not to mention my cognitive abilities at work. I'm running rings around my colleagues in terms of motivation and drive, and I'm only on my 2nd month. I'm going to keep going. Chipping away at some of those skeptics. Come on, bro, it can't be that good, can it? What are all these testimonials? Who keeps writing these? You must be fake. Another. AG1 has given me a lot more energy. I hope you're finding productive ways to use it, my friend. Just received my 2nd pouch of AG1 and I find improvement in short-term memory and not napping during the day as I did pre-AG1. And one more. Day 30 of AG1 and I cannot explain to you how much better I'm feeling. My social anxiety is so much better. I did not expect this to help so much, but it has. I feel energized, ready to do things. I've been staying on top of things for the first time in years. If you haven't tried it already, really truly try it. I was a skeptic. I did not at all believe it was going to help, and it has, significantly. Now believe it or not, these are the rule, not the exceptions to the rule. Day after day, more testimonials continue to roll in. People are trying Athletic Greens AG1, and almost everybody feels positive effects, whether it's mood, cognition, sleep, energy, reduction in anxiety. For some strange reason, it almost seems that if you give your body everything it needs to feel and perform its best, it'll feel and perform its best. What a crazy idea. For me personally, the biggest effect by far I've experienced from Athletic Greens AG1 is a massive increased and sustained boost in energy. Before I started taking Athletic Greens AG1, I was getting tired every afternoon. I was hitting a wall around 3 or 4 p.m. I felt so tired I just wanted to take a nap. I didn't, but I felt like I needed to. Thank that is now a thing of the past. The biggest issue I have now every day is finding ways to use all of my energy. So what are you waiting for? Head to athleticgreens.com/SMR or use the link in the pinned comment. Start your daily health habit now and let me know how you're feeling in a few weeks' time. Don't forget, if you'd like to unlock access to over 300 exclusive videos and counting, head over to Patreon with the card in the corner or the link in the pinned comment, and I'll see you over there. Love ya.